Usually we interview startup founders, but in this special episode, we talked with a venture capital firm that helps fuel startups. So if you're building your elevator pitch or learning about investors, pay attention. And this venture capitalist in particular feels that her industry is pretty misunderstood.
We, at the end of the day, are kind of like a service provider. We provide financing to a very particular type of company. I get to hear a lot of really exciting ideas, see really incredible founders execute on those ideas, and hopefully change the world in some small little bit. Hi, I'm Jules Miller. I'm a partner at Mindset Ventures.
Mindset Ventures focuses on early-stage tech investments in order to forge meaningful connections with brilliant minds and bring their ideas to life. Regarding the unlikely and seeking the extraordinary, Jules is using her venture capital firm for bigger and brighter things. How would you describe being a startup founder, and in what ways did that influence you to become a venture capitalist?
I actually started a Big Four accounting firm, so not maybe the most traditional entrepreneurial path, but I was an entrepreneurial person. I started 2 companies, and just once you get in it, it's very hard to go back and do something different. So the more and more I got into the startup world, I just decided that this was the only thing I could possibly do with my life, that it is the most interesting and exciting and fun thing to do. I was always very entrepreneurial. I built things. I like creating things. And actually, as an investor, you don't necessarily get to create, you get to support founders doing amazing things. I think that high growth startups are extremely intense to build as a founder. You literally eat, think, dream, sleep, talk, walk. Everything is about the startup. I'm not saying that's healthy, but I'm saying that's typically what you need to do, and that intensity level that you need to do in order to create something from scratch, and something from scratch that grows extremely fast. I will say that I didn't intend to be a VC. How I got into it was I felt that there were some opportunities to improve on the VC landscape a little bit. I wanted to fund more women and people of color and diverse, non-traditional founders, and that was really how I got into the space. I no longer focused out on that exclusively as a thesis, but I always do that as just a human who cares about that. I make sure that my pipeline is full of founders that aren't just the typical kind of Stanford dropout tech bros, and I make a really concentrated effort to do that. And I think the only way you can change an industry is by being in a position where you can actually make decisions, and in our world, that means writing checks.
What does the future of venture capital look like to you?
Our fund lifetime cycles are, 10 years. We have 5-year investment periods. So it is changing, and I'm very positive about the change that I'm seeing. There is real effort, and there's real momentum around investing in companies that have more diverse founders. I will say that the check sizes are still much lower. And so while there's a lot of talk about it, there's a lot of enthusiasm, there's a lot of support, I always think that this should be very market driven. And this was where I always came from, is this is a big opportunity, and not that this is charity. This is not, doing something good for the world. This is actually amazing founders who are just not having access to capital, who are going to do big things, and I'm going to have high returns from it, and therefore I'm going to put in a bigger check. That still, we have some progress to make there, but I think we're getting there, and I think we'll get there, in the next 5 to 10 years.
What lessons did you learn as a startup founder that you took with you to Mindset Ventures?
So 2 things, growth and people. Those are the only things that matter in startups. And you have to trust that not only the team can do the thing that they're doing now, but they can do the 20 things that they don't even know they need to do in the next 5 years. And I think for me as a founder, that lesson was very clear when I was hiring, when I was selecting my co-founders, when I was working through the process. There were some limitations. Like, we had some people on board who were amazing, and we had some people that maybe this was not the right path for them, or they didn't understand what it meant to be a high growth company. Everyone needs to be on the same page, and the company cannot grow 10, 20, 30% a year. It has to be growing 200, 300, 400% a year. And that's a very different type of business than most entrepreneurial ventures. And so that type of just, intense focus on growth is what makes a startup, in my opinion. As an investor, I look for companies that are already growing that fast, or if they're not, have the potential to, if I write a check.